But in the unlikely event of an all-out financial collapse, silver will be the money of last resort. Gold will have too high a unit value to do everyday trading, but silver will be used as money again, and therefore everybody should have some silver coins on hand. That's basically the first rule, and it sounds very bizarre, but it's happened in history over and over, and we think, well, in the modern world of technology could be our doom rather than our savior. Gold is at an all-time high in many currencies. It's just that everybody seems to measure gold in terms of US dollars, and in that case, it hasn't hit a new high and sustained it, but it will.
Precious metals surged this year as the dollar, affected by economic uncertainty and improving growth abroad, fell from two-decade highs set late last year. Analysts anticipate continued strength in silver prices over the next year, further straining the world's reserve currency. While gold and silver are seen as safe haven assets, silver has recently become more of an industrial metal. Around 60% of global silver consumption is attributed to industrial usage, with the remaining 40% for investment purposes. Sound money advocate David Morgan suggests that in a complete financial collapse, silver could be a more practical option for daily transactions due to gold's potentially high unit value. Precious metals traditionally serve as safe havens during economic uncertainty, with silver often increasing in value during crises. David advises individuals to consider holding silver coins, citing historical evidence of their reliability as currency, providing stability and liquidity during monetary upheavals. Citi analysts led by Maximilian Leighton believe that precious metals, especially silver, have near-perfect conditions for a continuing bull market. They project prices could surge by 18% to $30 per ounce in the coming months. David discusses ongoing shifts in the financial landscape, noting that gold often acts as an indicator preceding significant changes. If gold surpasses the $2,000 barrier and continues its upward trend, it could foreshadow the potential introduction of a new central bank digital currency, CBDC, or a similar financial reset. Despite an unfavorable macro backdrop, central bank purchases support gold near all-time highs. According to the World Gold Council, central banks bought a historic high of 374.1 tons of gold this year. David suggests this trend might serve as a hedge or a backup plan. Central banks may view gold as a safety net, an insurance policy in case other monetary mechanisms fail. Theoretically, a significant acceleration in the value of gold could potentially pave the way for a return to some form of a gold standard. We will present clips from David Morgan's interview with ITM Trading. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
And gold usually will lead. So you may see, that $2,000 barrier broken, and then we start to move up to 21, 22. You got to remember, and I know you know this, I'm saying it for the audience, that gold is at an all-time high in many currencies. It's just that everybody seems to measure gold in terms of US dollars, and in that case, it hasn't hit a new high and sustained it. But it will. I think once you see that take place, again, usually gold leads, meaning that not long thereafter, I'm going to guess 6 months, a year, you'll see the ultimate proposal of the new CBDC or something like that come to the fore, and there'll be a huge sales pitch on why it's so good for you, and no one can steal your money, and you never have to worry anymore. Your real ID system is going to prevent anybody from hurting you, and you have security like you've never had, and on it'll go. But of course, it's really a prison system. I've maintained that the reason the central banks are buying so much gold, they set a record last year, most gold buying in, I think, 5 decades. This year, they're on track to do the same. And the reason is gold to the bankers are the money of last resort. In other words, if everything else fails, you go back to a gold or pseudo-gold standard. It doesn't have to be a gold coin standard with 100% banking. It could be, as Jim Rickards has said many times, 40% or whatever, but at least it's tied to specie, to gold that's been recognized as money for 5,000 years. So I think that's kind of a backup plan for a lot of the central banks. And as far as the Dutch central bank is concerned, Jan sees it differently, and he could be right. I pointed out in that previous interview that, and having lived through it, and you have to be about my age to have lived through it. I mean, I became a sound money advocate like age 11 or 12. But when we saw this rapid inflation taking place last time in the United States, gold took off. I had some contracts on it, $300 gold for December of 1979. I rolled them over into January, and in that month to the next month, it went from 300 to 850. So it rapidly went up, and this is when Volcker stepped in. And the point being is, if you took the M1 money supply versus the amount of gold purportedly in Fort Knox, you got a full 100% gold coin cover at $400 gold, and yeah, gold went to 850. So we had double what we needed in gold reserves to go right back to the Bretton Woods Agreement. But no one wanted to do that.
So
No one proposed it. And so my point being is that, as he said in the article, if gold accelerated to a high enough price, you could go back to a gold standard, and then you'd have to lock it in, and that's the problem. Because every time you go on a gold standard, the human element comes into it, and they start printing more receipts than there are gold to back it up. That's why the Bretton Woods system failed.
The momentum for central bank digital currencies, CBDCs, has remained strong in the latter part of 2023. New research from our CBDC tracker indicates that 130 countries are now exploring CBDCs, accounting for 98% of global GDP. David observes that the core of CBDCs is the drive of financial institutions to digitize and encompass everyone in their system, aiming for broad inclusion. However, he anticipates potential resistance, suggesting alternative digital currencies, like a gold-backed digital option. Many individuals might not fully grasp the implications of these digital systems, which, while convenient for daily transactions, could wield significant control over their lives. David underscores recent cyber attacks on financial institutions, such as the disruption faced by the Chinese bank ICBC. According to market sources, a ransomware attack on the Industrial and Commercial Bank of China, ICBC, caused disruptions in some U.S. Treasury market trades, albeit with limited impact. He stresses that while geopolitical tensions between Ukraine and Russia or conflicts involving Israel are concerning, his primary worry centers on the financial system's vulnerability to cyber threats. A collapse resulting from a cyber attack could overshadow the impact of physical conflicts, potentially leading to severe disruption and chaos. Let's get back to the interview.
Yeah, it's really hard. I mean, you can't really be outside the system. I mean, it's very difficult. There are people that are, meaning that they never have a bank account. There's like, I looked it up recently. I think it's 1.6 billion people on the planet are unbanked. And one of the subtleties to this CBDC is that the bankers want everybody digitized. They want everybody to have a real ID and be in the system, meaning their system. But I digress. There will be people that reject it, and there is a counterbalance to it. I mean, as I said earlier, you could be on a, let's say, gold-backed digital currency. Bitcoin is pretty anonymous. I mean, there's things that you can do to mitigate the problem, but whether or not that would have enough traction to outdo the bankers remains to be determined. A lot of people just aren't aware of monetary history or what's coming down the pike. And they will just automatically say, well, what's the difference? I use my phone to pay for everything anyway. I use Apple Pay or Venmo or
right,
one of these other payment
right,
systems. It's just another one. Who cares? So they won't see what's really behind it, that they want
exactly.
to basically track and tax you at every point of sale. Then they want that data to be used to basically control your life until you eat too much meat. You can't buy hamburger anymore. Yeah, but I got $1 million in my bank account. We don't care. You still can't buy meat. You had too much this month. Not realizing, myself and many others in our peer group, our contemporaries have said that when the Silicon Valley Bank went down, that this is the beginning, and it's going to go on for a long time. And if you look at this Chinese bank, what is it, ICBC or something, that is purportedly one of the largest banks in the world, that had a cyber attack, and it really messed up the Treasury auction, or at least that's what the mainstream financial press is saying. I mean, these are big, big problems, huge problems. And yet, again, people are kind of numb to it. Most of the people don't study the financial markets as strongly as I do and others in our genre, but they're oblivious to the fact that this Chinese bank is having massive problems because of a cyber attack. That's my main concern. I mean, this may sound harsh, and I'm concerned about Ukraine, Russia. I'm concerned about the Israeli situation. But I'm really more concerned not for people getting hurt, but the system getting hurt. Uh, by a cyber attack more than I am an actual physical war. I hope I'm saying it in the right context, because I don't want to sound insensitive to people getting hurt or dying. I am very sensitive to that. What I'm saying is those casualties, as harsh as they are, could pale if the whole system goes down in a cyber attack and no one can get to their money. Because even though energy makes the world go round, people believe money makes the world go round. If they couldn't access it, we'd have a real problem. And I'll just go one point further, and that is that Klaus from the WEF talked about a cyber attack that would make the COVID situation pale in comparison.
Gold and silver see increased demand due to global conflicts serving as safe haven assets in uncertain times. However, silver has a history of holding its value even when other assets such as equities and bonds are underperforming. What are your thoughts on future price movements of gold and silver? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.